Hey Kyle, if you start the day red, or let's say your second or third trade is red and it puts you red on the day, at what point do you stop trading?
Yeah, it's a good question. So I recommend having kind of a hard cutoff dollar amount. But personally, I'm not going to stop until I either don't have an A plus setup, right? So recognition of A plus setup is key. This kind of the slippery slope for a lot of traders is if you do start with a couple of red trades, it's very easy to start to convince yourself to take something subpar just to recover partially, or maybe just try and hit the home run, recover all of it. And the other thing that comes to mind is if you do start red, traders have a tendency to deviate from their system on that third or fourth trade. Like, let's say you have two full stops. On that third trade, they're looking at like a single trade to make it all back rather than taking profits at their first target, taking profits at their second target, where if they were in a clear state of mind, they would normally be doing that. On this particular trade, they're not. So the judgment gets clouded. If your judgment gets clouded, you need to either take a walk, try and cool yourself down and get back into like a clear mental state, because the damage is only going to get worse from there, or have the self-awareness to recognize you're not seeing clearly, you're not trading well, and just shut it down. So two things. If I notice that I don't have an A plus trade, that tends to be what it is for me. There's just no more A plus setup. So if at that time I'm red, I'm red. It is what it is. Or if I recognize that I'm not thinking from a clear frame of mind. Those two items are especially key. And another helpful one is just a max daily dollar amount. That's one that at my current experience level, I don't keep currently because I've just not needed it. But there is that one in the past has saved me. The other one that I had a lot of success with throughout the years is 3 red trades in a row, shut it down. Because generally speaking, what that would mean is that my read is wrong. I'm not seeing something correctly in the market and I need to reevaluate. So that's usually a big red flag. That's one I still pretty much keep to, although that's super uncommon for me, at least this year, to have 3 losers in a row. And so those are kind of the metrics that I'd be looking at, paired with some type of maximum dollar amount on the day. And usually for set that value can be kind of tricky to set. Where do we put it? A good rule of thumb is usually what I like to suggest is like whatever your average gain day is. Let's say it's $1,000 max loss on any given day, and of course this depends on how good your hit rate is and how frequently you're green, but 2 daily goals. So it'd be 2K in that scenario. And that may be a little bit too wide for some of you guys if you're more risk adverse. And so you can adjust it as you see fit. But we want to have some type of framework that we stick to. And then the other thing is you have to actually stick to it. None of these things matter whatsoever if you're just going to blow right through it, right? I've worked with some clients in the past that they have all the rules, everything's written down, but when it comes time to follow the rules, they don't follow the rules. So, okay, well, I mean, what are we doing here? So that's what I would say about that.